Hello, everybody, and welcome back to the Tariff live stream. We're Tariff and Trade War, um, part two. There's been a lot of news going on in this topic, so I figured it would be relevant to do a live stream. And the first thing we are going to do is just kind of go to a little bit of a rundown of what has happened since the last time we had this live stream about a week ago. And then after that, I will be taking on your guys' questions. And if we have bonus time, I might even do a breakdown because somebody requested this of all the books on the bookshelf because a lot of you guys ask about what these are and if they're worth reading and what's interesting about the bookshelf and the story behind it. But let's first kind of start with what happened in the last week. To get things kind of started with tariffs, basically, we had the Liberation Day announcement where there was a flat 10% on every country, even the one with the penguins and no people. And then there was a bonus penalty for certain countries that had disproportionately high trade deficits. And the formula wasn't calculated based on necessarily direct tariffs, but what they believed was unspoken penalties. So they did that by just calculating the trade deficit and had a formula based on the trade deficit of what they bought from us versus what we bought from them, and said if you have a trade deficit, you deserve a higher tariff. And so I thought that was kind of arbitrary and it was not really the best of will. But you've had a lot of changes since then. The biggest one happened, I think, on Tuesday when in the morning, President Trump suspended the tariff for 90 days on every country except for China. And the market ripped. It was the third highest rally in the history of the Nasdaq, and I think it was similar for the S&P and the Dow. For though, and just as a disclosure, I have to do before I go into commentary related to the markets. Nothing here is investment advice. Please do your own research or team up with an investment advisor to help. I actually do run a wealth management firm, but I'm not going to go into specific trading questions or investment questions or financial questions for you guys. If you have more specific things you want to ask about, please contact me directly, either via my website or via email. With that out of the way, let's get back to the core commentary here. So you've got, when it comes to tariffs, and they removed them all, the stock market rallied a lot. But the dangerous part of this is the only time the market really rallied that much, like an 8% or more in a single day, usually is associated with the middle, not the end of bear markets. Like in two of those times were in October of 2028. And then for those who know financial history, the bottom of the GFC market sell-off was in March 2009. So you had another 5 months of pain after that. And the other time was right at the end of the COVID pandemic panic. So you had the market rally a lot on that day, and that ended up marking pretty much close to the bottom. But that was a different context. And yeah, I think when it comes to what this impact of this suspension of the tariff news, it doesn't eliminate the odds of recession. I think it maybe reduces the odds of recession by about 5%, but they're still well over 50%. Recession remains my base case for the economy. I thought recession was going to happen anyway due to the combination of Doge cuts trickling through the economy and just a stretched consumer. If you look at the data, like you have most bottom half of America is drowning in credit card debt and auto debt and or student loan debt, and those balances are continuing to go up at scary rates, and the delinquency rates or the ability of people to pay those on time is going down. So the more people are in delinquency or in default on their consumer debt, which is also a bad leading indicator. And that's also why I don't think the tariffs were going to be inflationary, because you can't squeeze blood out of a turnip. If people's income is not high enough and there's not enough wage pressure and a tight enough labor market to drive up wages higher enough to people to pay the higher prices, those higher prices simply just are not going to be paid. And so as a result, that's why I don't think tariffs are going to be ultimately that inflationary. And now with the 90-day suspension and tariffs really only going towards China, I think the odds of these tariffs being inflationary are come even lower, because a lot of the goods that people buy from China are not high-end luxury goods that cater to the more affluent Americans who can easily absorb the full price hike. Most of the products from China either are business to business consumption, so they're parts for things that are manufactured, the end process is finished in the United States, or they are lower end to middle class consumer products that people buy because they are relatively affordable. And so, therefore, the pricing power is not really there to hike prices proportionately. Um, and so, that's why I don't think necessarily these are going to be inflationary, not because in an abstract market they would be, but just given the demand destruction that's going to be created from it, that's why I'm not as concerned about it. And yeah, I think it's recessionary and definitely contractionary. Like, tariffs are just like any other tax hike. Um, the amount of tariffs that are being instituted is the equivalent of raising income taxes by about 25% on each bracket. And that goes into the next part, really, of these tariffs. And that is, with the 90-day suspension, there are two key things that people are not fully pricing in. One, the original 10% tariff that Trump wanted to slap on all the countries is still there. So you're getting rid of all the bonus penalty tariffs, but the 10% across the board is still going to go into effect. That is not being suspended. Second part is a lot of all those tariff gains, bonus tariffs, all that revenue is going to now be shifted towards China. So if you do the math, basically, and if you all they did is just redirect like doubling China's tariff, getting up to 100 and I think it's 125% now, or 107, it's somewhere in that range, to that level, and removing all the other tariff boosts to the other countries. Since China is such a big chunk of the trade deficit, it's basically a wash in terms of the net tariff charged, on a trade weighted basis. And so like the actual net tariff really hasn't changed, and it's still going to be at least the highs last seen 1960, and depending on how you calculate it, could be even 100-year high. So that's what's going on with there, and there's a few reasons why did he do this. There's a few theories I have on this. One, the bond market has really started to put pressure on the president. Like, it's one thing for the stock market to go down in response to these news. Another thing is if bond yields go up while the stock market going down. That's a sign of loss of confidence in the U.S. government to maintain its fiscal obligations, and it's a sign of capital flight or countries selling their foreign holdings of treasuries in response to these policy decisions. And they don't want the bond market to blow out, because the Treasury Department needs to re-roll these bonds at lower maturity rate, lower interest rates as these maturities expire. And so if they're higher, then you can't do that. And so that's major problem. So that's part one of this, is why I think the big driver is the bond market. The second thing is I think there are a lot of countries, particularly the smaller countries, that are coming to deals. And it takes time to negotiate these deals. It's not going to all be ironed out in a day. So the 90 days gives breathing room for negotiations. But let's just say it's 70 to 80 countries, like the administration claims. According to the UN, there's 193 nations in the world. So that means there's a decent chunk of countries that either are really too small to be factored in or don't have enough trade with America to be factored into this whole news, or who are not coming to the table. The most notable one of these being China, but I think there are several others who may not be coming to the table. And this negotiation process and this tariff process is kind of a litmus test to see who is really wants to be still part of the liberal or national order, and who still really wants to be part of the new trade network that America wants to create and who doesn't. And you'll get a good idea of what side each countries are on geopolitically and economically. And China and the US are number one or number two export or import partners for most of the world, especially if you consider the EU countries consider imports and exports outside of the bloc. And so a lot of countries are going to have to make a hard choice. And I think a lot of these tariff negotiations, there's going to be stipulations that, like, fine, we'll do a 0 for 0 deal, but there's going to be some like stipulations that you can't accept. You have to charge a tariff to China as well, just to show loyalty, or there might be some protection fee for military defense of the seas, or if you don't sign a trade agreement with America, you will not get your ships defended in the sea lanes. There's going to be some sort of levering, like, and monetizing, for lack of a better term, the military protection of the U.S. and how the Navy protects trade and the global international order. The deficit in the U.S. has been too large. Doge is going to probably end up cutting what I expect it to, somewhere about 150 to 200 billion a year as it's all said and done, but that's far lower than a lot of people hoped. And it's not going to be enough alone to shore up the balance sheet of the federal government unless if you made serious retirement entitlement reforms, which is not really on the agenda right now. So, yeah, I mean, what is my base case for this? I still don't know. I think you'll see a lot of countries come to deals, but the 10% is likely to stay, and that might be an indirect protection fee, and that's how they will settle a lot of those issues. Or it's going to be just the new way to help balance the trade deficit, because when you have twin deficits, which are big government deficits and big trade deficits, like greater than 5% of GDP for each one, that's when you start to have real structural economic problems, which actually start to show in declining living standards for American citizens. And I've also kind of dived into this as I'm doing research on economic booms for a series I'm doing. And there are periods like when the economy is growing nominally, like the 2000s, the 2010s, the early 80s, etc. And people, and even inflation adjusted, is still growing. But the fact that the deficits are so big as a percentage of the GDP, if you subtract deficits, they really aren't growing. Like, for example, the last 5 years, like if you take out the growth in the deficit, the economy's been contracting by over 4% a year on average. And when somebody like Scott Bessent says the private sector's been in recession for the entire Biden administration, I think that's how that you count to that number is like, if you have a deficit of 6% of GDP, but you only have GDP growing 3%, then is that actual economic growth, or is that the government just spending above its means to keep the economy afloat in the more superficial way? That's an economic philosophy question I want all of you guys watching to ponder. So that's kind of where we stand now. I think you'll see news of trade deals trickle in and out. And the real question is that will China come to the table or not? I honestly don't know. I mean, if you have 100+% tariffs on somebody, that's effectively an embargo, like, especially in the post-mercantilist world, which I would say is anything after the Napoleonic Wars. And the one thing that may not be in the pure embargo world, because a lot of Chinese products are more low cost, so 100% tariff may not be enough to stop buying some stuff that they can just make way cheaper than anybody else. Or even if it's not cheaper, they can make it in a way like rare earths, for example. They have a big edge in rare earths because they've spent 40 years developing the infrastructure for it. And they did that, one, for geopolitical priorities, but two, also because of pollution. Like, the rare earth minerals are some of the most environmentally toxic resources to extract in terms of like air pollution, water pollution, not even climate change, just concerns, like legitimate, like environmental reasons. And so that's why it migrated away from the US to China, because China has the technological capabilities but it doesn't have the environmental standards that a lot the West has. So they kind of fit a niche that works really well for rare earth exports. But the thing is that that's the question. Like if they come to the table, then you could set a more healthy foundation for the future. And if they don't, then we might start to see two separate blocks form, kind of like what happened post World War II with the Warsaw Pact and the countries that traded with them, and the NATO and the countries that were aligned with them. We just have two separate economies, and we have two worlds. That is another real possibility here. Um, Again, I don't really know the probabilities of all this, and I'm not going to try to have some false confidence about a situation that is ever flowing. So that's kind of my comment on that. But the other question is going to be like, what does it look like for the U.S. and China to come to the table? Because yeah, I mean that's a big question too. Like, what does the world mean that is a more quote unquote fair trade balance? There's a few ways that this is going to work. One, I think it's going to require a reduction of the value of the dollar, especially against the RMB. Like if you look at like presentation I did on Saturday here in Newport, and I actually did upload the video on Sunday. You guys should all watch it. It's about um, the case for international investing, and I go into a little bit about tariffs. And one of the slides on there that I show is about purchasing power parity and about which currencies are trading most over and under their purchasing power parity. So like how much, for example, would be like a meal at a nice restaurant cost at country X and country Y if you adjust for everything. And one of the most discounted currency really in the world right now, or at least one of them, is the Chinese RMB. Uh, and like again, this is based on data I did like a few weeks ago, and the RMB has come down since then, so it might even be more um, extreme. But like it's trading anywhere from a 35 to 75% discount of its fair value. Like um, the PPP exchange rate for the RMB should be like 4 to 1, and right now it's over 7. So like that is there's not going to really be a trade deal settled unless if you have the some sort of devaluation of the U.S. dollar. I mean, it could be just across the board against every currency because the U.S. is overvalued versus most currencies of the world. That spread is narrowed somewhat. Like the euro, the level of overvaluation now with the euro close to 114 is close to only like 4 or 5%. But other countries have a much larger overvaluation, such as the Japanese yen, the British pound, the Mexican peso, Aussie dollar, etc., Brazilian real, a lot of other countries. But I think you could see, I think one of the things you're going to see, in my opinion, here is weaker U.S. dollar. Um, the dollar's structurally overvalued for a while. Uh, if you want to have exports more competitive, a weaker dollar is a way to do it. Um, and if you want to lower trade deficits, a weaker dollar helps with that as well. But yeah, and the expense is that it's just going to make imports more expensive and it's going to make international travel more expensive. So if you want to do that European vacation, uh, you're you probably should have booked it a few months ago, but now is probably the time to do that kind of thing, or international travel, because I think this time 3 years from now, the dollar is going to be much lower than it is, especially against the Chinese RMB if there's some sort of trade deal. The other thing is I think you'll just have to have lower tariffs from both countries across the board and more and less restrictions like rules about JVs having to have local owners and certain percentages of that being relaxed, if not eliminated. IP rules would have to be reformed and have more strict enforcement, and just other things to make sure that everybody's a more honest player in the business world. That's what a deal would look like if it happens. So, those are kind of my opening comments, really, about this whole thing. And now, after that, I'm just going to get into some of the preamble questions. Uh, and another comment is that my bracket for March, I ended up getting it right with sadly, because it was a boring tournament, but the Gators ended up winning the national championship as I predicted on our live stream back in March, right before the tournament. So, um, Yeah, it also reminds me of back when I used to actually watch college basketball in high school, and back then my two favorite teams were UCLA and Florida, and I liked Florida because of their color scheme and the logo. And then I realized the SEC, as the SEC fans got a little bit more um, vocal, I switched away from supporting the Gators. But that's a little bit off topic. But let's get back to your questions. First of all, is this all a bluff? What's going to happen with 125% tariffs on China when it comes to industrial equipment needs? Can we ramp up domestic production quickly? This seems improbable. Well, I mean, I think there is likely to be some sort of Mexican standoff here. Like, I don't think that this status quo can really hold indefinitely. I think that there's going to be some sort of thing that's going to happen. Either it's going to be a deal, or there's just going to be like an outright like termination of international trade with China, and just in general like a decoupling of the two economies. Those are the two outcomes that are going to happen from here. I think a deal is the more likely outcome, but that's kind of the and also and in the modern era, like so basically since the Napoleonic Wars, there really hasn't been a time that 100% tariffs have held for more than like 6 months. And if I'm wrong, feel free to put it in the comments because it's an educational experience. But I think that this negotiation will be resolved sometime before Halloween of this year, if I had to predict it. The pro-growth side of Trump's policy plan needs to be initiated by then because it's going to take another year for the economy to ramp back up, and you don't really want the economy to be on the downtrend into midterms, and you want a healthy foundation for 28. I think that you also I think also the midterms are kind of a lost cause for the GOP here, and I think they deep down know that. That's why they've been running super fast on just policy reforms in general to get this into a 4 years worth of action into a 2 year plan. And then after the first 2 years, you just have to wait to see if it works. Like, I think, honestly, President Trump is making a huge gamble with the American economy. Like, American economy and culture and a lot of the socioeconomic issues that have basically been in arguable decline since 2001 are kind of at a breaking point that we either just fully decline to a more like just weaker country with a more European style social welfare system, but without the social trust and the average standard of living. Like, or you have some sort of structural reforms to re-spark American industry and growth and inspire young people to actually want to be entrepreneurs and do stuff again. And this trade balance and some of these other structural reforms are kind of the current administration trying to just grab the bull by the horns and be like, look, we're going to go all in now. Either these reforms are going to work and there's going to be a new healthy foundation for the economy, or it's going to fail badly. You're going to have President Alexandria Ocasio-Cortez in 2028, and we just have the fear to enjoy the decline environment where we have relatively generous welfare state, high inflation rates, and high taxes to pay for it, and just a gradual elimination of American exceptionalism, and it's just sinking down to the world average. Like, those are kind of like, that was the default trend, and they're trying to buck it now, but we'll see if it works and if it doesn't work, I don't really see the Republicans really being in power for 12 plus years after that either. So that's the political elements at play. And just to get to the question of the tariffs, is that they have to get this done because you need to start seeing the growth initiative start to work in 26. And in order to do that, you're going to have some sort of end to this. And yeah, longer term, yeah, I think both countries are going to become more independent, particularly for strategic assets. The pandemic kind of exposed the dangers of having critical, like, strategic assets and basic things such as public health and food infrastructure and other key like things you need to just run a country for security reasons, not in your borders. And nobody really wants to make that mistake again. So that's kind of the take on that. And now with and those are really and in terms of ramping up the time frame for domestic production, it's going to take several years, but this started already in 2016. People started onshoring, and there's also the component of Mexico. Mexico kind of serves the role of the country that can produce stuff that requires cheap human labor, but but they do not want to keep across the Pacific Ocean. Like anything that can be done with robots will be moved to the US. Things that cannot be done with robots will have to be made still in lower cost countries. And I think Mexico is the main beneficiary for that. Um, so so that's my opening comments and the original questions. And now I'm going to get to your guys' questions in the chat. I'll try to answer as many of them as I can. I'm probably not going to be able to get to all of them. If you want to have priority, please super chat. And without further ado, I am going to get started on some of these. How bad do you think the recession will be? Minus 20% or minus 50% or more? Like, are you referring to the stock market minus 20% or minus 50%? Because I mean, it's almost certain it's going to be greater than minus 20. Minus 50 is usually associated with major bear market bottoms. Like on a monthly bait chart, it's rare that the stock market stays down that more than 50% for more than 30 days. Like the only time I think that's ever happened is the Great Depression. Hopefully that answers your question. Nick, was this whole thing really needed? They needed to do something. There needed to be some sort of structural reform. Did I agree with tariffs and the arbitrary calculations, how they handle it? No. But if you kept on the existing path that the country was going on pre-2016 and they tried to go back on from 2021 to 2024, that wasn't going to work. It was a slow, enjoy the decline type decay into irrelevance and lower living standards, and an eventual fiscal sovereign debt crisis. That was the path that we were going on. Something needs to be done differently, and that's really what the debate is essentially, is how to go about doing that differently. Was this all intended to counter only China? Now it seems to be positioned that way because it's more politically popular to do that, but I'm not sure if that was the original intention, but I can't really read the minds of politicians, so the world may never know. What do you think Trump and his administrative endgame is? Yeah, I mean, I think it's kind of what I've explained to you. They want to reset the economy so that you have more manufacturing done locally for security reasons, and also you have more higher paying job opportunities for younger people, and to have real wages stop declining. Like trade is only one part of it. Immigration is the other part. Like the whole drive to reduce immigration and have actually maybe net negative in immigration as a response to the previous 4 years of open borders is to help lower labor supply, because lowering labor supply, it increases wages, particularly on the lower end of the wage curve. So that I think is a big driver of this as well. So then the other thing that might derail all this is AI, though. I mean, in the age of AI, you simply just don't need as much demand for labor. And that's not just going to be high skilled white collar people, but they're the first ones who are going to get affected. It's also going to affect people in the trades, especially as humanoid robots develop. All right. Hello from Vegas. Any thoughts on the impact to tourism, especially on the spendy kind of tourism that Vegas depends on? I don't think this is necessarily good for Vegas, and Vegas tourism is also kind of at risk due to the affordability and accessibility of gambling online. But Vegas especially has been aware of that one, so they've pivoted, and it's not really solely a gambling place. It's kind of just more of an adult entertainment party place to go to nowadays. And it's kind of where you go to splurge. It used to be a place you go like if you wanted to like save money versus other places. And now it seems like it's a place where you go to kind of like splurge and celebrate. And that different dynamic means that it's more pro-cyclical instead of counter-cyclical. Vegas and gambling used to be counter-cyclical. Like when times were bad, people would be more have a higher propensity to gamble or go to a relatively affordable travel destination. But since Vegas has upscaled its pricing and that like the low-end gambler can just do it from home, whether at closer casinos locally as gambling laws have been liberalized or just on their phone, it's a very different dynamic than it used to be. So yeah, I think this, like, in the long run, if the working classes have more money, then yeah, Vegas would benefit, but there's definitely going to be pain in the meantime. Any concerns about falling dollar and rising bond yields? Well, it's happening right now. I think bond yields will stabilize, especially if the economy goes into recession and the Fed lowers rates in response to that. And also as like a lot of this trade uncertainty gets settled and you see just a net fiscal tightening from it. In theory, that should be good for the bond market, but the dollar I think is going to continue to drop. I don't really see how that'd be any different. All right. Here's a thank you for the super chat, McNello. As a software engineer, I'm optimistic on onshoring manufacturing equals lots of robotics jobs, which retire a lot of intense engineering. Yeah, I'd agree with you. Like robotics engineering is going to be one of the great places to invest in, whether there's tariffs or not. Like, if you can make things more efficiently with robots, it's going to end up being more cost effective, no matter how cheap the labor is. America has some of the lowest energy costs in the world due to abundant natural gas and now being a net oil exporter. And energy is almost as big of a component as labor for many products in the manufacturing cycle. Another thing, robots don't need pensions. They don't need health care. They don't have families. They don't need time off. They could run 24 hours as long as there's electricity. So I think manufacturing is going to pivot that way no matter what. And I think that's probably one of the better places to be at if you're concerned about job security. So thank you for the comment. Let's see. What are your thoughts on the long-term and short-term effects of the trade war with China? Short-term recession. That's the main consequence. Reduced trade is going to be recessionary. Businesses being paralyzed to make decisions because of this is going to be recessionary. Negative wealth effect from falling asset markets is going to be recessionary. And then just firing all the government workers in DC is going to be recessionary. Longer term, it really depends on what kind of trade deal is negotiated, what kind of new trade order comes. There's just a lot of uncertainty here. I know I'm not being as direct as I'd like to answer some of these questions, but there is a lot of moving parts here. And yeah, I think you'll have more manufacturing domestically. I think robotics technologies, when you eliminate sources of cheap labor, it usually forces more innovation. And so I think that one of the consequences of this is that you're going to have more robotics advance a lot faster than people expect. And I also think that the idea of the demographic burst is not going to be as big of a problem as people feared, because you're not going to need as many people to do things. So but I think in the long run, it could set a healthier foundation if we're able to use this to build up a new manufacturing industry and robotics and AI driven manufacturing industry that is globally competitive. If this is the spark for that, it can be the next big driver. Like robots can be the next revolutionary technology that like the internet was in the 90s. I really think if everything kind of handle, there's no crisis that blows up because of this, the 2030s can be the next great boom decade. And I think right now, if we had to compare it to like another time in economic history, look at what happened in say 1981 and 1982. Let's see, in the early Reagan administration. Let's see. Other questions I have here. Recession odds during the Trump presidency. Yeah, I think it's well over 50%. If I had to handicap it today, it's probably 70% recession happening within the next 4 years. Well, I think it'd be a super deep one. Like '08 level recession, no, I think the chances of that are probably less than 10%. But I think a mild recession is well in the cards. It just we just haven't had a mild recession really in a long time, at least one that's officially counted. I'd argue 2022 was a mild recession, the first 6 months of it, but like on the official data, the last time we had a recession that wasn't a full blown financial crisis was in 2001. And 2001 is, I think, what the administration is betting on, because that's one where Wall Street and stock market did really bad. Like you saw like 50% corrections in the S&P and 80% in the NASDAQ, but unemployment barely ticked up, and people, what's it called? What was I gonna say? Yeah, and outside the San Francisco Bay Area, you didn't really see that much like consumer distress. And so that's, I think, what they might be betting on here. Uh, and if that's the case, it'd probably be a very good opportunity longer term to buy investments. But I'm not going to go into specific trades or investment advice on this stream. Let's see. Also, is going into the trades a good strategy for AI disruption of labor? Unless if you, I mean, I think that choosing being the trades versus a white collar profession is more of a personality trait. And an aptitude thing than a financial strategy. Because I don't think that the trades are going to be a safe haven from technological disruption. I think physical robots are coming, and they're coming a lot quicker than most people anticipate. See my video I did last year about mobile aloha for more details on that. But yeah, I mean, if you're going to not have cheap labor from either immigration or trade, they're going to have innovations in agriculture and construction and a lot of these other industries that historically have driven the trades. I think are going to become increasingly replaced. Like, I think if you want to be in the trades, it's going to be more how to manage a fleet of robots to handle a lot of this stuff on an industrial level, or to come in and fix things when there's a malfunction. So kind of like how, like in the 2000s, we had IT guys at every company that came like to fix, like if your Wi-Fi is broken or something like that. I think the trades are going to shift more to that kind of role than you doing the dirty work yourself necessarily. So that's kind of how I would take that. Oil looks cheap. Any chance it gets back to 70? Yeah, I think it will get back there, but not until recessionary fears are done. Like, I mean, oil really doesn't stay under 40 unless if there's like a severe recession, um, or like in the case of the pandemic when people just stopped buying oil because nobody was moving and it went negative briefly. But yeah, I can't really say when, but I mean, yeah, I think the likelihood of oil getting back to 70 in the next 5 years is fairly high. Why place a tariff on Canada when both the economies are so tightly integrated? Well, because of USMCA, like over 95% of goods are exempted from tariffs. So the only things that tariffs are going to be placed on, I think, are stuff that's not affected, that's not covered by that treaty. And the reason they feel that, because Canada has a lot of protectionist tariffs, like for agriculture and a few other products that they don't really want American competition for. And so that's why he feels like he's doing it. And plus, I think the US, I don't really know what the US's deficit is for Canada, but there probably is a trade deficit for Canada because the US has trade deficits for most countries. And yeah, that's why he just thinks it's unfair that they have tariffs on us and even little niche industries, and wants to get that rectified. Are we in recession right now? You probably won't. The NBER probably won't officially rule on it until like a year from now, but we probably are. Where are you from in the States, out of curiosity? I am from Southern California. I've lived also in Pennsylvania, and I've lived in Arizona, as well as in Singapore and in Italy and briefly in Southern France. But yeah, Northern California as well. But yeah, I'm from Southern California. Let's see. Why does Trump want to de-dollarize? I don't think Trump wants to de-dollarize. But he kind of wants to have his cake and eat it too, essentially. Like they want to keep the dollar as the US currency, but they also want to devalue. And that's threading a thin needle, which is kind of tricky. Personally, I think strong dollar is a good thing. It's a sign that you have a productive economy, and it means that your imports are cheaper, which means your living standards are higher, and it makes travel more affordable. And in general, I think for the consumer, a strong dollar is good, but it's bad for exporters. And if you think a trade deficit is the problem, then a strong dollar is a problem. But like, look at the country that is historically the strongest currency in the world, and that is Switzerland with its franc. I don't really think the Swiss people are having a hard time because of their strong currency. In fact, I think they enjoy it. So, yeah, and if that's kind of the my take on that. Let's see. How do we protect against de-dollarization? Uh, and thank you for the correction on the Canada. That it's mainly due to oil imports. Uh, so then, but yeah, when it comes to how do you protect against de-dollarization, well, it's not like something that, like, from, are you talking about from like an individual how to hedge your portfolio, or are you talking about how a country can protect from de-dollarization? Uh, because if the government, how does the government protect against de-dollarization? Is that they make the U.S. still the best place to place capital and make it a business friendly place, and try to have a economy of fair dealing, if not give outright favorable deals to foreigners in terms of trade and investment. That's if you wanted to keep it. From an individual person, then you would do you just invest in non-U.S. assets like foreign currencies, foreign bonds, foreign stocks, foreign real estate, etc. Um, Hypothetically, if you wanted to do that. Where did I grow up? Yeah, I also grew up in Southern California. Um, yeah, so I moved. I'm one of the few people who actually likes his hometown and moved back, I guess. But most people I know usually leave their hometown and don't come back. But yeah, that's kind of my thoughts on that. And also, when it comes to, I'll let a few more questions trickle in, but in this meantime, I'm just going to give a reminder of announcements for the Analyzing Finance with Nick tour. Our next stop is going to be in Dallas on April 25th. And then we are also that weekend going to, because it's on a Friday, and then that Sunday, the 27th, I am going to be in Austin. And then we're having our East Coast swing, which I'm going to New York on May 10th. It's a Saturday. And then the following Monday, May 12th, I will be in Philadelphia, Pennsylvania. So if you want to see me in Texas or the Northeast, springtime is the time to do it. I'm also going to be going to Chicago on June 14th, Calgary June 1st, and also I will be in DC most likely on June 7th. I look forward to seeing as many of you guys then. I've had a great time with the meetups so far in here in California and Arizona and in Florida. And I'd like to, and the tour is going to continue, and we're probably going to have some stops in Europe this summer and back in Northern California and Seattle as well. But I'm just going to save those announcements for later and just stick to the ones that are closer. And then the other thing I was going to mention too is, if my city is not that you want me to go to on the tour, there's a form in the description and of this channel that you can vote on where I should go in the future. And if there's big enough of an audience, I will consider going there. And then the other places you can find me is I have a Substack called Nick's Present Value, where I go into more of this stuff in writing and share you updates on videos. And you can go to nickpardini.com to learn more about what I do, both in my business and other things. But now let's back to your guys' questions. Do you think Trump and MAGA will take over some of the elite positions in the government and other institutions? Well, they've already have. And I think Doge is part of the process to kind of allow that to trickle in. We're kind of in the process. The right wing in America has kind of developed more of a backbone and is starting to fight back for a lot of the institutions that have previously kind of been a monopoly of the left. Whether that's a good or bad thing, I'll leave that up to you guys to decide, but that's kind of how I see it. Yeah. Did you go to public or private school K through 12? I did both. I spent half of my education in public school and half of my education in private Catholic school. So, like, elementary school was split 50-50. Middle school was Catholic school. High school was public. My college was public. And then grad school was private. So, yeah, it was kind of just, I did a mix of both, is the answer to your question. Yeah. And then, what's it called? Another question I have is let me just scroll up. Do I have any other questions? It looks like the chat's rather quiet. Okay, well, since I'll wait for questions actually before I end this. I'm going to do a review of the bookshelf because this is a good time to do it more than any. Because people ask me all the time, like, what are all these books here behind me in the bookshelf? And so I'll break those down, but I will answer questions in the meantime. Any indication there's a larger war coming? No, not yet. But there is a risk. There's an old saying. I can't really know who the quote comes from, but there's a quote that basically says, when goods don't cross borders, weapons will and bombs will. And that is a real concern, that trade wars can escalate to real life wars. And nobody really kind of wants that, to be honest. So that is my take on that. I think the odds of war with the has gone up, but it's still well below 20%, or even still maybe even below 10. The gold silver ratio rarely exceeds or reaches 100 to 1. Because of this, I don't think the gold to silver ratio really affects my view on this. And I got another super chat. Thank you. I realize Trump is gambling on longer term to bet improve country futures, but I worry the citizens will prevent paying out for welfare. Yeah, that's my concern. I talked about this early on the live stream, if you weren't there, that if Trump's gambit to realign the economy based on domestic manufacturing fails, we're going to realign the economy towards a UBI, social spending type model under President Alexandria Ocasio-Cortez. That is the risk, and that's not really a now problem, but that's a 4 years from now problem. Yeah, love your content. I feel like I struggle to get objective financial advice or general info that isn't influenced by politics. Yeah, I mean, I do have my political biases, but I do try to explain both perspectives and be intellectually as honest as I can. Thank you for my kind comment. Any concerns the military is not meeting recruitment goals? No, I'm not really concerned about that, because the way that combat war is evolving is that we're switching more towards unmanned combat. So more drones, more robots, less relying on real boots on the ground. And so we can probably run the military a lot more efficiently, not just in terms of dollars spent, but also in terms of manpower. And so I'm really not concerned about that at all. But I might be over bullish on robots. So people have criticized me for that before, but I generally think, and I think that there are certain countries that are really good at inventing robots, but may not have large populations, that could become military powers in the future. The two I'm thinking about would be Japan and Switzerland. Like, they're some of the leading technological innovators in the world. They have a lot of money to spend on this kind of thing, but they don't have manpower. So, and the U.S. is fortunately one of these leading robotics countries, and they kind of have a mix of both having a lot of manpower and a lot of innovation in robots. So I think the military is still going to be in relatively good shape. Do you think the current environment is a bad time to take a year or two off working? Well, it depends why you're taking a year or two off working. Do you like to go to school, or to spend time with your family or something like that? In theory, like it's more of a personal decision, but like the recession is probably going to last about a year. Like these recessions typically last 9 to 18 months. So like if it's longer than that, it's like 2008 level GFC type crisis, which I just don't see happening. So like, I mean, so by the time you're done with your 2 years off, it might be a good job market again. But it's difficult to time these kind of things. I would weigh personal factors over this than solely economic ones. But like, am I going to say, look, you're never going to be able to get a job again? Probably not. Especially, and if the thing is also, if you're going to, you need to stay caught up in terms of like your continuing education and just figuring out how AI and other technology is going to impact your job role. So I would factor that in too. Yeah. What's the situation with some welfare? Because I've heard people on both sides of the aisle are quite upset. Which welfare? Because generally conservatives are not upset about welfare being taken away. So I don't understand what you're going through on both sides being upset about this. Thing though, I actually am probably going to do a video about this. Is the other comment I wanted to do. Let me and please respond on what your thoughts on this, because this is a video I might make coming soon. Is that the trade war might actually be a class war? Like if you look at, I've looked at a lot of the responses on Twitter and X, as well as just talking to people about this, and the responses to how people feel about this trade war and these tariffs in the stock market is very class driven. Like people in the upper middle class and the top 10% are really angry about this because their stock portfolio is going down, and they have enough economics education to realize that tariffs generally are not a good thing. Whereas people in the bottom classes and the younger people are like, don't care. And they're actually happy that the stock market's going down because one, either gives them a chance to buy the dip, or two, that's like, look, nobody cared when my family lost their job because my factory got shut down due to foreign competition. So I don't care if these rich boomers lose their money because their stock price is going down. It's a lot of that kind of resentment I've seen, especially, and surprisingly, even among like people otherwise people think would be more conservative in their politics. They're actually kind of telling people, look, you need to get rid of your consumption. Maybe it's not a bad thing to have a higher tax via a tariff. It's an interesting paradox that I've been seeing. So I might dive deeper into that. Like, is the trade war a class war? And arguably it is. And that's maybe why you don't really see the tariffs being that unpopular outside of the more higher echelons of society. But that's kind of, let me know what you think about that idea. Next question I have here is, as a finance sector worker, how can you orient one's career towards planning around AI? Yeah, I mean, you just need to be able to learn how to use AI to help speed up your research capabilities and or help with like just making you more productive and allow like, and it also just, and focus more, I would say, reallocate that time that you're spending on just raw research and finding numbers to more learning how to interpret things, what they mean. Like critical thinking and soft people skills are going to be more valued in finance, and hard number crunching is going to be less valued in finance. Yeah. Let's see. With 125% tariff on China, hurt the U.S. or China more in the short and the long term? I think it hurts more China in the short term because they're the surplus country. The U.S. imports more from China than China imports from the U.S. In the long term, it could hurt the U.S. more because people may not see the U.S. as a trustworthy trade partner, and this might motivate people to switch sides. But in general, I think short term China is definitely hurt more. I've been contemplating about cash in USD and go start a business in Latin America where my grandparents came from. Yeah, I mean, I'm not going to really comment on personal situations here. If you want to talk more about that, contact me directly and we have a more private conversation. In your opinion, is inequality likely to worsen in the future? No, I think inequality is going to go down. I think it's peaked actually, starting around 2019, and it's been slowly going down. But that's not necessarily a good thing. Usually, when inequality goes down, it's a byproduct of some sort of crisis, whether it's a war, famine, financial crisis, or very harsh redistributive politics, or like it's usually because of the top people losing wealth more than the bottom gaining. I care more about absolute living standards rising than how much more somebody has than another. And I've done several videos about why I think this is the case. Um, let's see. Yeah, it seems like you guys want me to do this class war video. Um, so that's I will. So it looks like I will probably make that. And let me have a sip of water to catch my voice, and I'll get back to it. Without UBI, inequality is positioned to skyrocket. No, I think UBI could probably accelerate inequality. It would create more of a well, I mean, on paper, it would maybe look like the inequality statistics look better, but make the real truth of it worse. Like examples, like I did a video about the social class hierarchy in Europe, where basically everybody's in the lower middle class except for the old money families. And that's kind of how it would work in a world of UBI, because the taxes that would need to be raised to finance UBI would make it so prohibitive for any new entrants to enter the business world and not reward anybody from becoming successful from scratch. Then people are basically going to give up on trying to do anything. And basically, most people will live like a perpetual college freshman at UC Santa Barbara. Like they go to the government will likely, instead of university classes, the government will likely have pre-scripted fun activities that people can do. And you do those, you socialize, you probably go to some parties and just slowly decline and not have a family, because UBI is not going to be enough money to actually have a family, but it'll be enough to live as a comfortable person. They basically imagine life under the UBI, and this is the most charitable. It could get a lot worse, but I'm trying to give the steel man for UBI. Would be everybody gets to live like a college student perpetually. And for a lot of people, particularly those on the left, where their college years were probably the best years of their life, that doesn't sound like a bad deal. But yeah, but can we just keep subsidizing the rich? I guess the lower class is paying tax to accommodate that is okay. What do you mean by subsidizing the rich? Like, I don't really think the rich are really inherently being subsidized. This might be an unpopular view. I mean, there are some people who are politically connected and in certain industries that are dependent on government contracts or favorable regulation. Yeah, I would consider that subsidizing the rich. But I don't think that as a whole, those who are not connected to power are not being subsidized. Let's see. Will Bitcoin holders that do self-custody become a new nobility? No. I don't really think that Bitcoin is going to go to $1 million and you're going to get rich simply investing in a speculative token. Like, there needs to be some sort of productivity going on. The people on the, and then even if that happened temporarily, then those who got lucky and bought Bitcoin would not be the best at allocating and spending their money. And those who are productive will ultimately move back to the top. Like, there's actually a lot of statistics on this. Whenever they've had like major wealth redistributions or communist takeovers of countries, and the old elites are basically reset to zero, like within a few generations, those families come back to the top, because a lot of it is just really a product of education and values and certain proclivities to business. So, yeah, I think the same thing would happen in that hypothetical scenario, even. If World War III starts, say, from the U.S. invading Greenland, would such a situation hurt the U.S. economy or help it? I don't think the U.S. would invade Greenland by force. I mean, if the Greenland's going to be acquired, it will be some sort of purchase deal. But hypothetically, if they did, I don't think World War III would help anybody. It would result in a nuclear apocalypse. And pretty much anybody who doesn't live in like the most rural parts of the developed world or will be dead. And it's not going to be good. Let's see. How about the economics of debit cards and the economics of cash video? Interested how different spending habits by tender. I mean, I don't really think that would be that interesting of a video, to be honest. I have a lot of other videos in mind that I want to do. Uh, like I might do one about like the how much cash is still a role in the economy might be interesting, but I mean, I don't know. I just don't really think debit cards are that would be that interesting for you or for me to really discuss. But thank you for the suggestion. I appreciate it. Keep coming with them. Um, yeah. Larson, what is that previous question? I mean, okay. Do you ever have difficulty navigating through the media internet when gathering information, whether it's political, financial, or other? I'm paranoid about AI bot farms, propaganda sometimes. Yeah, this kind of goes to the dead internet theory, which is the idea that most of the internet is like AI generated and not really people doing anything anymore. And yeah, it's a kind of a concern because I don't know half the time people is coming to the truth. Like I use an AI, for example. I'll run a query on like ChatGPT or Grok or Gemini, and I don't just take or Perplexity, and I won't really take it for granted. Like often the next like query I'll ask is, where did you source that information? And hopefully it will give me a source link, and then I can look at that and see if I trust the source link before I can trust what the AI is saying. Um, and that's basically how you have to do things. I mean, I think there are certain platforms that can be helpful for this. Like there's this RSS feed that I have called All Sides Balanced News Feed that just gives me a bunch of stories and tries to neutralize the headlines. Ground News can be helpful for that, but I think that you can just try to find counterbalances for on both sides for news feeds. Like I'll read the Wall Street Journal, but I'll was a center right news like source for financial related topics, and I'll also read Axios, which is like a center left um, news source for financial and economic related topics. And you just have to have enough critical thinking skills to like kind of separate what is true or not. Another thing to look at is generally what one side is willing to harp on really hard, but the other side just fails to acknowledge or ignores. Usually means there's some sort of truth in it because they don't have a good counter argument. Those are just a few ways you can look at it. I don't particularly like mainstream financial news like CNBC or Fox Business. I try. And the other thing too is for finances and whether a news story really matters, look at how the market reacts. Like if the stock market reacts to it, it's probably a big deal. If the stock market doesn't react to it, it's probably not a big deal. If you look at like if it's a specific niche, look at a company that might be particularly affected. So say for example, you care about news related to I don't know, theme parks that like roller coasters are becoming increasingly less safe. And you see a lot of headlines on this that people are dying in mass numbers from roller coasters flying off the tracks. And if this was true, you would see it in the reflection of the stock price of Six Flags and Cedar Fair probably going down a lot on fears of people not wanting to go to amusement parks because of this. If it's not true, then the stock probably doesn't move at all. I mean, it's not a perfect example, but that's just you kind of understand my thought process on this a little bit, hopefully. Will the Fed start QE soon and drop rates? How will this impact Bitcoin and gold? The Fed will drop rates if there's a recession, but they will not drop rates back to zero. And QE is going to be very unlikely. It's probably going to be a higher low in rates. So usually those type of stimuluses don't really drive speculative manias unless if this level of stimulus is bigger and better and has more shock and awe than the last one. And I think the probability of that is lower this time. But I'm not going to go into specific implications for gold or Bitcoin because I don't do that on these live streams. What's the best way to over a finance career after spending a few years working some other white collar job after college? There's a few ways. One is MBA. Like MBAs are generally for people looking to switch from one white collar profession to the other and to help of credibility. And especially if you go to like a top 10 MBA, after that, the value proposition goes down. You can do the CFA exams to show that you have some base knowledge, and you can just network with people in the finance community and like kind of show your work in a way, whether through online publications or just like sharing interesting ideas with people who you meet who are decision makers at funds you might want to work for, or investment firms. I mean, there's a few ways you can go about doing that. Um, let's see. What are some good industries in finance for startups? Consulting, fintech, new market makers. Um, yeah, that's really a good question. Let's see. In terms of like financial startups, yeah, I mean, I don't know. I think it's just providing increased access to alternative investments is generally something. If you can do it in a way that's compliant and legal and what's it called, and scalable, like that could work. I mean, because like accessibility is something like new financial innovation is basically making previous thing investments or trading strategies that are previously harder to access easier to access. But yeah, that's let's see. Next question. Who do you think is selling off in the bond market? If it continues, what does it mean for the economy? And who do you think sold and why? There are some like there's really no way to say. It's probably like a lot of it is unwinding of a basis trade, which is people who have bought, um, who basically sold futures and bought bonds, and they collect a spread on those. And when markets get crazy, that trade breaks down, so people have to cover their positions, and that causes selling. I think Japanese might be selling uh, as well. China's been gradually phasing out their exposure to treasuries, but simply by more letting their treasuries mature instead of and not buying new ones rather than outright selling. But yeah, there might be some foreign um, investors selling because for trade balance and currency protection needs. But yeah, I'm not really sure of the answer, to be quite honest with you. Um, what careers are going to take off over the next few years? You guys ask me a lot about these career questions, which are tough for me to answer because I'm not really. I think a few industries though that I think do well. One is private education. A lot of people just don't trust the school system, particularly millennial parents are very skeptical of the school system. So I think, but not everybody has the time or the app or the desire to homeschool their children, and so there's going to be some sort of niche to create like more creative and innovative private schooling. And so that's one I think is going to do well. I think robotics and AI are going to do well. I think the video game industry, especially if VR really advances, I think will continue to do well. I think content creation is going to do well. Um, yeah, but it's going to be different because AI is going to automate a lot of stuff. So it's not going to, so it's going to be a lot harder to stand out. But I think that, and I think construction, particularly residential housing construction, um, as an industry, I think that will do well, at least in the United States. Other countries, it won't because of demographic fallout is going to create enough supply opening of housing without needing construction. Um, and so, yeah, and then I think nuclear power is another one. You can see Murphy's video about that for the full bullish case for nuclear power. Um, but there's a lot of different industries. But I think in terms of careers, I think AI engineering, robotics engineering, um, yeah, I think that those are probably going to do well. I think again, getting involved in some sort of like private school alternative education is going to do well. Um, and I think that just also like just starting businesses and leveraging this technology to do what like a 10-man team needed with only one or two. So entrepreneurship, I think, will continue to do well as well. Why do you think wars lower wealth inequality? Because there's a few reasons why. One, often in wars, the people who have less means are often casualties of war. So if you lower a lot of the bottom of distribution, you just have less mouths to feed. As I know that sounds very Malthusian, but that is one thing. The other thing is a lot of wealth is lost in wars. Like real estate, there's a lot of people hold their wealth and is destroyed by wars. Um, Taxes tend to go higher in wars to finance the war. So even if you're in the winning side and you're not physically damaged, your finances are often damaged by higher taxation or forced purchases of war bonds that the interest is often lower than what inflation is going to be. You often have higher inflation during wars, which also devalues assets. Um, and inflation disproportionately hurts the middle classes and the wealthy compared to the poor. Um, and so those are things why war tends to be bad. And yeah, it's just because you're on the net destroying things. So that and usually destruction of wealth is what lowers inequality. Um, yeah. Do you think that one positive from these tariffs, recession, and possibly lower credit available cause Americans to live within their means? Yeah, that's a possible positive. Is that I think one thing that could happen from this tariffs, and this is determined whether it's positive or not. I'm not really sure this side of it is that the consumerist culture will decline. Like like conspicuous consumption will just be too expensive and people have to buy things that last longer and or just not be consuming as much. So I think you'll have a less consumer you'll like but the thing is that that's assuming the tariffs are last long enough and are deep enough to actually cut consumption. If they don't, then it's going to really have no effect. But I think on the margin, it does cause people to live within their means. And like that reminds me of these proposals that like you have like Anna Paulina Luma and AOC and a few other like populist right and populist left um, Congress and are proposing that you cap credit card interest rates at 10%, which in theory that sounds great, but in practice that's not really going to help the people it's intended to. If you cut credit card interest rates at 10%, banks will just simply not offer credit cards or only charge cards and you have to pay it all back at the end of the month or you default. And there might be a positive side effect of that though, which is the one you said, is that basically you're restricting access to credit so people can't live above their means. So that's that's kind of my take on that. Uh, do you like movies? Have a favorite genre or even a favorite movie in general? I find them to be a great escape from the stressful reality of today. I generally prefer video games to movies, personally. I've always kind of been preferred games to movies because I think with video games, they do require a little bit more thinking and my brain is restless. But if I want to just zone out, um, movies are good. I also like watching sports generally more than movies, particularly basketball. The problem is like the quality of movies has really gone downhill since the last 10 years, especially since like 2015. Like I could probably count the number of movies I've seen in theaters with one hand since 2020. And if I go back 10 years, I can maybe less than 20 movies I've seen in the last basically in the last 10 years in the theaters, or even that many. So I'm not a big movie guy. My favorite movie of all time is The Truman Show, though. And my favorite movies in general are ones that come from the late 90s. I think that was a time when like a lot of the old studio monopolies broke down, but you didn't really have the international market to appeal to. So as a result, a lot of movie producers had a lot more creative flexibility back then. So if I had to say, my favorite movie is definitely The Truman Show. Really makes you think about a lot of things, and it's funny. And Jim Carrey is one of my favorite actors of all time. So that's my answer to your question. I like movies that make you think. I like comedies and I like action movies. And I used to like Star Wars before the last trilogy of the 2010s. Um, all right, let's. Do you like strategy games? Yes, I like strategy games. And speaking of strategy games, I might as well go into some of the stuff behind the curtain here in my shelf. I have some of my strategy games I added to the shelf. One is Diplomacy, which is my favorite strategy board game. I talked about it last time. It's where you're one of the 7 powers of pre-World War I Europe: Germany, Italy, Austria-Hungary, the Ottoman Empire, France, Russia, or England, and you each have about the same amount of armies and fleets on the board, and you have to basically negotiate with the other players to basically mock foreign policy to help conquer half of Europe. It's like a 6 to 7 hour game, usually on average, and you got to make sure your friends don't take backstabbing personally, but it's very fun. It's my favorite board game. Chess, this is like a mini chess board I take with me on the road. You never know who you meet who's a good chess player who make a good match. And I like to play chess. Acquire is a game of mergers and acquisitions. It's like the strategy game where you build properties and try to buy properties from the other players. And it's like a Monopoly without the luck of the dice. It's a lot more sophisticated. Ticket to Ride is a game where you build trains to connect different parts of the world. There's an American map. I have the European version personally. Another fun strategy game. And Where in the World is just more geography trivia. Geography is one of my favorite non-financial subjects to learn about. And I'll get into the books later, but to answer the question, yeah, those are some examples of strategy games I like. I really like strategy board games. Another one I like is Yacht Race, which is this really old game from the early 60s, which is very hard to find. You got to find it at somebody's garage sale or on eBay, but that's a good one too. I have a strategic mindset. That's part of the reason why I work in finance, because it's the ultimate strategy board game essentially, except you have pretty much unlimited moves and unlimited pieces to play with. And so, yeah, I'm really big into strategy board games. Would it be a good thing for the country if people actually live within their means? Is consumption such a big part of GDP? Well, consumption, depending on how you measure, is 65 to 70% of GDP. And there is the idea, the paradox of thrift, which I actually did a video about this a long time ago. And like before this channel, anybody watched it. And it's the idea that like, if somebody is financially responsible as an individual, it's a good thing. However, when everybody becomes financially responsible at once, the economy theoretically collapses. And that is kind of the paradox of thrift, because recessions come from just everybody on the margin, people just spending less money on the aggregate. I think in general, savings is a good thing, because if you save money, that savings turns into capital available to lend out or to invest, and that promotes growth. The tricky part is that a lot of banks will put a lot of their excess reserves in treasuries simply just because they don't have enough good things to loan money to, especially at the size that it needs to move to move the needle at all for a lot of these bigger companies. So the paradox of thrift might actually be more relevant now in a world where there's not enough quality business borrowers to lend to. And that's also why lending standards often drop to dangerous levels to cause crisis, is because there is a fundamental problem of not enough quality things for banks to lend to, for lack of a better term. So yeah, I think the paradox of thrift is a real problem, but I wouldn't really think about it, because in general, people are naturally more, especially in America, are way more consumer oriented and not savings oriented. So your difference to change your lifestyle is not really going to be something that causes the paradox of thrift. In an ideal world, we'd have a more deflationary system where instead of inflation being 1% to 2% a year, it'd be 0 to -2 a year, and you gained from saving. It'd probably may not put me out of business, but it'd probably hurt my professional career, because a lot of people invest in the markets to kind of protect themselves against inflation. But it'd probably be a good thing for society as a whole. Am I a Lord of the Rings fan? I watched the movies in middle school, and I prefer The Hobbit in terms of the books. I liked The Hobbit quite a bit. I thought the Lord of the Rings books were good, but they weren't really my all-time favorites. Has anything got better in the last 10 years? Well, a lot of things have gotten better in the last 10 years. First of all, like AI has made things a lot more efficient and productive. I think YouTube has gone a lot better. Like you can have a lot better quality content on here than you did 10 years ago. Travel's gotten a lot more affordable generally. in the last 10 years. That's something that's gotten better. I think that parenting quality has gotten better in general for various reasons. Like people who want to be parents now make a more serious effort in being good ones. Like you've also like teenage pregnancies are down. That's also a positive thing in society. Alcohol drinking is down, especially among Gen Z, which I think is a positive. And less drunk driving thanks to Uber and other things like that. But yeah, and then the stock market's considerably higher than it was 10 years ago. Interest rates are higher than they were 10 years ago. So you can get you get more yield if you want to save and be more conservative. There's certain cities that have rapidly gentrified and improved. There's a lot of things that have gotten better. I think that the problem is that there's been a relatively stagnant economy for the last 20 years, and you've had a relative undersupply in real estate that's kind of wrecked things and made people perceive things to be worse than they actually are. Yeah. Let's see. Do you think a PhD in geometry can help with a finance career? Well, PhDs in math in general are useful for quants, but it seems like that's more like statistics and calculus. I don't even know what does a PhD in geometry do? Like the last geometry class I took was in the 9th grade, so any perspective on that would be really quite helpful. And I'm looking for this video to share with you guys that I did about the paradox of thrift. And I'll get back to answering questions once I find it. Here it is. Paradox of thrift explained in 8 minutes. Here you go. So if you want to learn about that, there it is. Nick, where do you see yourself in the next 5 years, day-to-day work-wise? Well, I mean, I see my business growing a lot. I mean, hopefully my firm has more than $1 billion under management, and I'd be doing more focused on analytical and portfolio management stuff. I think this channel hopefully is going to be in the mid 6 figures audience-wise by then too. I don't know if I'll still be doing the tour because hopefully by then I'll be married and have some kids, so I'm not going to be traveling as much. But yeah, I expect to just be kind of continuing what I'm doing now, just at a larger scale. That's my goal. I'm glad I found the path that I want to do. I just want to be able to do it at a grander level. I might expand my business more overseas too. That's the other thing. But that's kind of some goals. And then other things. Fusion energy. Well, I think fusion energy has a lot of potential, and I always see a headline like every 2 or 3 years that it's about to happen and revolutionize the world. But we've been talking about that since it was in Sim City in the 90s, and we still don't have it. So yeah, it's slowly making progress. What's my current AUM? I'm not going to discuss that on a public platform like this, but let's just say I've got a long way to go before I get to $1 billion. But it's pretty good my AUM is pretty high for relatively how early I've started the firm, but I'm not going to go into specific answers on that. Are you a happy person in your life generally? Well, I try to be. I mean, I don't think the purpose of life is to be happy, though. I think the purpose of life is to really, there's 2 of them. One, from a more religious perspective, the purpose of life is God's test of moral character. That's the number one reason why we're all here. But from a more secular perspective, it's more to just feel fulfilled that you're actually doing something that leaves a mark beyond yourself in your life, and that you're actually making a difference in the world. Like if you disappeared tomorrow, would anybody even care? I mean, that's kind of what matters kind of more to me. And also just am I doing something that's in line with my big term goals? Like if you're taking a lot of risk and you're doing things like starting a business or going to school at a prestigious university that requires a heavy workload, or doing anything, running for office, or doing anything that's remotely challenging, you're not going to be happy all the time. And happiness is a temporary feeling that you can't really chase, because there's hedonic adjustments, naturally set back down to normal levels. I don't mean to get overly philosophical here, but yeah, I mean, life is more about fulfillment than happiness. And I generally am fulfilled right now. So by that definition, yeah, I think I'm happy most of the time. But in terms of like, do I have a smile on my face and I'm walking on sunshine all the time? Probably not. That's, to be quite honest, I think, but I don't think that's what life is about either. So yeah, and I mean, maybe I should do a channel analyzing philosophy with Nick. That's the other question I have for you guys. Should I be splitting should I create sub channels for other topics? Like even within finance, like should I have like a channel that's only class related videos, or a channel that's only interviews, or a channel that's only lives? Or should I just have it all on the same channel like I have now? Because I've got a lot of suggestions from my friends who I've met who are decent sized YouTubers that I should split things into the other channels. But I think I'd like to prioritize growing this channel first. But I do get kind of disappointed, to be honest, that like any video I do that's more granular and not about like social class is not watched as much, especially in like my options series. Maybe it's options trading is a little bit too niche for my audience, but I thought I did a really good job with that iceberg, to be quite honest, and it just didn't really catch on with you guys. This is why I made me think about this. And then what's the next question? When was I the least happy in my life? Probably middle school. Oh, definitely. Like 7th and 8th grade were the 2 worst years of my life. Not even close. High school was a little bit better, but still kind of rough. And then my first year out of college was also pretty rough. And then I had a bad year in my mid-20s. But like, yeah, these things are in cycles. You're going to have times you feel really happy, and then you have other times where you're sad. But basically, most of the quote unquote bad times of my life are concentrated in my teenage years. And so the thing is that a lot of young people have a problem where they're naive and optimistic in their youth, and they get more hardened and cynical as you're older. I've kind of had the opposite problem. I was really hardened and cynical by the time I was 21 because I basically had 8 years of relatively bad life. And as things have gotten better and I realize things aren't as bad or aren't as doomer as I feared, I've become more optimistic as I've gotten older. Part of it might just be my age and how old I was during the great financial crisis. But also it had to do with just, my certain personality traits and certain specific struggles that I've had to deal with that other people have probably not, as made my life harder than it probably should have been as a teenager. And it wasn't like really things it wasn't like poverty or anything like that. It was more like psychological things. Let's see. What do you think about the CEO of Bridgewater? He had no financial experience until he started as a 32-year-old intern. No, I mean, read the book, The Firm. He worked in finance most of his career. He was originally a newsletter writer and was involved in commodity trading, but he started his hedge fund when he was in his early to mid 30s. So I don't know where you got the idea that he started as an intern at 32. I think you're Dalio. I think you're off on that. How old am I now? I'm in my 30s now. Yeah, I mean, I don't know. How old do you guys think I am? Put it in the chat, but, or how old did you think I am before I gave you that hint? But yeah. What's it called? Next, let's scroll up on some of these questions. Nick, you can be considered the working class in America, still own a detached house with a car or two. Wouldn't you have to be in the upper middle class to have the same in Europe for that part? Yeah, I mean, that's part of my criticism of the idea that Europe is such a better place. If you have more modest ambitions, Europe is probably the better place to live. But like the social class in Europe, most people are lower middle class. Like that's kind of the dirty secret of it, especially in continental Europe, outside of Switzerland. So yeah, I think you have a good point there. Uh, let's see. Based on your comment, your intro to the workforce was during the GFC. Well, it was close. Um, let's see. What do you think of the Trump administration versus left old money elite in the US and Europe? Do you think we have a change of power at the top? Is this an idea for a video? I thought about doing a video about how Trump's election was essentially a turnover of the elite, counter elite, taking out the existing elite. And we might be in the process of that, but it's too early to say if that's really truly forming right now. The last time we had a turnover like this, depending on if you count it, was maybe the Reagan Revolution, or if you go further back, like the 60s and the 70s, when the old like WASPs elites lost their grip on running the country and they're in the social turmoil of the 60s. Any advantage of trying plenty of financial careers? Yeah, there's people who've switched into different things. Like they started investment banking and then do private equity and then hedge funds and VC. It's more just, I don't think it might give you a better understanding of how everything works in a way, but also specializing benefits for you. Yeah, let's see. So that's kind of my take on that. Let's see. Do you like to read history? Yeah, I do. I do like to read history. Most of the books I've read are finance or economics related, but I've also read a lot of history books. I've read a lot of history Wikipedia pages, and I've watched probably a lot of history YouTube, and I've read a lot of articles and things about that. And I go to museums to learn about history. So yeah, I'm pretty well versed in history in most parts of the world. There are some places that I could learn more, but how do you think I'm able to bake this channel? Like, I mean, I can incorporate. Economic history is another one. Favorite time period to learn about? I generally find pre-World War I history to be the most interesting. Like basically anything between, say, I don't know, ancient Rome to World War I. So like 100 BC to 1900 AD. Like ancient history, there's just not enough there oftentimes, and a lot of it's more speculation than anything. And then the closer you get to the current day, it becomes more politics than history. What is my opinion on private credit and direct lending? I think the right deals, private credit makes sense. But that's kind of a case-by-case basis, to be honest with you. Yeah. And speaking of history books, I'm going to go through some of the books on this shelf here. First is Orange County Inc. It's a book about the history of Orange County and entrepreneurship in the community that I call my home. It is it's not really tech based like as the Silicon Valley was, but it's kind of surprisingly a lot of like great founders and entrepreneur stories here in the community. Then there's the other one is the commemorative wine bottle with the picture of Murphy and I speaking at one of the meetups. I don't really drink, but I put it here just kind of as like a memento to one of my first major fan meetups. Other books here, like I have that are more like economics, financial related. They May America, which is about the history again of also like entrepreneurs, but except across America and mainly in the 19th century and the first half of the 20th century, and also the story of Bill Gates and how Microsoft was built is really fascinating. What's it called? Shadow Men is if you want to go into the weird conspiracy side of things. I think they're wrong about how the Federal Reserve and central banking work, and they're probably wrong about other things that my expertise just doesn't really say, but it's still very interesting. Stan Weinstein is a good book about technical analysis. Even though it might not still perfectly work to this day, it's still a good kind of primer for a trading system. Golf is not a game of perfect. It's supposedly a book about golf, but it's really about psychology and just mindset of doing things. And golf is a good example because golf is a lot of times more of a mental game than a physical one. When Genius Failed by Roger Lowenstein is the story of long-term capital management and how they blew up. It was one of the first big quant funds, and they got over-levered and struggled during the Russia default and the Asian financial crisis to the point the Fed had to bail them out. Then you have A New Mercy, which is a book about how most people are bad at math and don't understand like exponent and basic mathematical functions and how that affects our politics and society in an adverse way. A Guide to Rational Living and Living Like You Mean It on more like personal psychology related books. One Up on Wall Street is a classic from Peter Lynch that teaches you how to like invest in things that you know about and fundamental analysis from that kind of perspective. It was one of the first books I read in college when it comes to markets. And Overruled, I haven't finished this one yet, but it's a book written by Neil Gorsuch about how like the legal system has kind of been corrupted in a way that makes it kind of just hard to like get really anything done and have like efficient court system. But I'll get more into it when I actually finish the book. And then this book, How to Create Lifetime Cash Flow Through Multifamily Property. So if you ever want to learn how to like build a business of like apartments, that's probably one good book to read. Marty's Why is another technical one. Great Rupture by Victor Schvetz is a macroeconomics book. He's an economist at Macquarie. I like reading a lot of his work. And his book is kind of a primer to like some macroeconomic analysis and his takes on that. And what's it called? The Confidence Game is a book about like how like people, and they use con artists as the example, but how people can make people feel more trusted and confident about things. Saints in the World is a book about Catholic theology, particularly about the Opus Dei philosophy of more or less that like you don't have to be a monk or a priest to like be a saintly person, and you can live a good life by actually doing your work in the secular world or whatever you're truly called to. Not everybody's meant to be Saint Francis. And that's always a dilemma I had when it came to like my faith in the years before past was like, I knew I didn't want to be some beggar on the street like St. Francis was, and I had a role in society, and it wasn't through the church. And this book is a good way, like perspective on people who want to live lives. Liberty Integrity is a good book about politics and how to reform right-wing politics. It was written shortly after the 2016 presidential election. George Soros' The Alchemy of Finance is Soros's primer and about reflexivity. And if you want to learn more about his like investment philosophy, it's not a bad place to start. The Rise of Carry is about how people get levered on carry trades and the consequences of that. It's a good book. The Show is a book about the history of the Los Angeles Lakers. So if you care about basketball, like the three hacks are like two of them are my main sports teams I like professionally, the Los Angeles Lakers and the Angels. And the Expos, I just think they have a cool looking hat, and it's kind of cool to have a hat of a defunct team with a good logo. And with that, that's kind of like a wrap of the top shelf. These are collectible mechanical banks I inherited from my grandfather. Like 100 years ago, people used to collect these banks. When I get to 50,000 subscribers, I'll demonstrate the banks. And the golf ball is a collector's item that I made for when I sponsored a hole at a charity golf tournament for Spearhead. But let's get back to the questions. I think you guys are getting bored of the bookshelf discussion. Opinion on Gary Stevenson's ideas. I haven't had a chance to watch so much of Gary's economics, but based on what I know him, he's very pro-wealth tax, pro-socialist redistribution of wealth. He was asked a lot on that on my last live stream. You should have an architect design your office. Oh, thanks. What's it called? How much money do you personally think you need before retiring? I have a specific number in mind. Like I want to have at least 20 million liquid excluding, and a paid off house. That's what I would need to walk away at this stage of my life. When I'm older, let's just say I had already kids who are all grown up and I've already paid for their college and they're all on their own, that number could be a lot lower. But if I was to retire today, that's the walk away. 20 million after tax and a fully paid off house and where I want to live. So it's gonna be it sounds like a big number, but it's really only about the net worth of like the top 0.5% of Americans. Um, let's see. Do all finance bros start out as gold bros? No. Gold is kind of a very controversial topic within the finance community. There's some people who hate gold, like Buffett is famous for calling it a barbarous relic. Other people love gold the same way that people and use the same arguments that people make for Bitcoin nowadays. And in fact, the Bitcoin fad has got me a little bit less bullish on gold than I was before Bitcoin became popular for similar reasons. But I think gold is like any other asset. Like it's good for hedging inflation. Like an ounce of gold buys a nice suit today. It bought a nice suit back when gold was a lot cheaper. And gold kind of moves better with kind of moves more with like inflation expectations, and it's just it and real yields fall because gold always has zero yield. That's what it is. It's like a hard asset with zero real yield. So if real yields are negative, gold benefits from that, or they're going more negative. If real yields are positive or getting more positive, gold hurts from that. Yeah, how would you invest and diversify? Well, I would just put it in a Spearhead portfolio and just do the same things I do for my clients with my own money. That's how I would do it. The only difference is I might have a little bit of real estate too, but generally just a mixed diversified portfolio of stocks and bonds. Do you think alpha will get harder to find as the world becomes flatter and more competitive? Yes and no, because I think that alpha from information will get harder, and analytical edge will get harder as more smart people from around the world get in this industry. But alpha from behavioral might be able to stick around because people's time frames, especially in the age of social media and just how liquid and quickly people move capital, if you have the ability to stay patient and have strong hands, you can have, especially relative to other people in your asset class, you can make better long-term investments. And it's different for different asset classes. Like people in the VC, like 3 years is considered short, whereas in public markets, 3 months is considered short. So a lot of it depends on, and also how much peer pressure you have to compete with benchmarks. If you have no peer pressure to compete with benchmarks, you likely have a chance of getting significant alpha because you can make it through times where everybody's on one side of the trade and you look stupid. Let's see. Yeah. $20 million, so your earning annual expenses approach 800K annual. No, I mean 20 million. If you have 5% return, that's what's it called? That you get you $1 million pre-tax, and yeah, even if I saved half of that, that's like a number that I can live like an affluent lifestyle and not have to think about the cost of things, and yet have it be perpetual. That's how I get that number. You have foreign clients? Yeah, I have a few foreign clients. It's just that either my asset minimums are higher for foreign clients, or they have to do it through an asset under advisement agreement if it's too complicated to have it done via like a conventional account that an American client would have. But yeah, we do take foreign clients. It's just that the conditions are different. And if you want more details of that, just contact me directly. What's your opinion on David Swenson's portfolio construction? I think it worked really well back when he started doing it because there weren't that many people in private equity or venture capital or hedge funds or other alternatives. But now that those have become more mainstream, I don't really think the Swenson model has an edge anymore. It's just kind of like any other form of investing. Yeah, I mean, I guess except when your private jet needs repairs. Well, I mean, I think it's probably more efficient, really, just to charter when you need it for, or just fly business class if you're going by yourself versus buying a private jet. Like, I don't think I'm willing to work hard enough to get my net worth high enough that it makes sense for me to buy a private jet. But you never know. Like, I'd probably retire before I got to that level, but God may have different plans. Um, Really, one in every 2,000 Americans has a net worth of 20 million. Yeah, it's actually probably even more than that. It's I did a video about this, um, about how much money it takes to be rich as part of the Old Money series, and I go into and that was as of like 2023, but I go into the numbers on how many people have more than like 10 million net worth, how many more have 20, etc. I also talked about on the video is can you tax the rich um, to balance the budget? I go into the numbers on that there too, and the answer is you can't tax the rich enough because there simply isn't enough money to be raised by going after that even that amount of people to balance the budget. Um, so, what would you even do with 20 million? How would you spend it? What would your lifestyle be like? Well, it's a few things. One, um, there's certain like I'd like to have a large family, so like 3 or 4 children, and that's not cheap. If you have any parents watching this, they probably know. I know because I grew up in a family of five. I'm the oldest of five siblings, so I know that could get expensive. Um, and like paying for private school or creating a alternative homeschool with some other families where you hire teachers to work for you directly. That's not cheap. So that's one thing. The other thing too is I'd like to travel. I'd like to spend more time going to certain places around the world. I've done a decent amount of traveling, but there's certain activities I'd like to do more. Probably also go to more sporting events, try some more exotic hobbies that are not really in my current budget right now that I've done a couple times and have really enjoyed. Um, and then I'd want to live in a more affluent suburb, and houses those in those places are on average more than $3 million a piece, especially if you want like 3,000 square feet. So yeah, and I'd probably just hire help to do things I don't want to do. I'd outsource more of my day to day activities, which probably isn't. And then, but like, I don't really have that flashy of a lifestyle. Like, I'd like to drive a nice car, but it doesn't need to be like a Italian sports car or anything like that. Um, I don't really have any like any like major vices that spend a lot, but yeah, I mean, again, I haven't really ran through the numbers of this. It's just more of a hypothetical. Um, yeah, and I would like to. So that's kind of some things. Uh, does your income distribution follow the 80-20 rule? Like 80% from one source, etc. No, it does not. My income is actually a little bit more diversified than that at this point. Um, but I mean, if the plan does go to it way, it probably will. I mean, eventually get to more of that distribution. Um, let's see. Why does the country's reserve currency always have the most heavily weighted import balance of trade? It's probably because their currency is stronger than it would be otherwise, and so therefore it's much more affordable to import versus making things domestically. Um, yeah. Let's see. What are some of the different hobbies that you try that you would partake in upon reaching 20 million? Horse polo would be one. I've tried it once in South America, and I just can't really do that consistently. And most normal people cannot, but that was really fun. I'd probably go jet skiing more as well. I do it a couple times a summer, but that's pretty fun too. I'd play more golf at higher end courses probably. Um, and I'd probably put a lot of money into producing this channel and hire editors and other things to make it better. And that's probably another thing too. or I'd go to more conferences where I meet other interesting people. Like, I know that's not really a hobby, but that's probably something I would do more of if I had the time to do it. And then, yeah, I have to think about that, honestly. But yeah, what's your opinion on operating partners of finance? I don't really know enough. Do you know Doug Casey? I've heard of him, and I have a friend of mine who I joke is the millennial Doug Casey. But no, I don't know him personally. I do not have a Bloomberg terminal yet. That's the answer to that question. I did have one before in the past when I worked in other shops. Let's see. Do I have any other questions that I want to answer? Because we're hitting at the 2-hour mark. So, yeah, I'm going to do 10 more minutes. So if you want to get your question in, get it now. Super chat if you want to prioritize it. But yeah, I'm gonna stop this at the 2-hour mark. I'm just trying to see if I missed anything while I was doing the bookshelf. Do you see robots, AI factories being like plants? Give them energy, resources, and wait a bit, and then they'll give you what you want. I mean, I could kind of see that metaphor in a way. I mean, I think that's how movie consumption will be in the future. Like, if you watch movies, you'll be able to say, I want to watch a movie about Star Fox meeting Luke Skywalker, and it will just create a movie and make up the plot and do all that stuff for you. Like, I think that will be something how they happen in 20 years. And basically the way that these media companies will maintain it is they'll create the intellectual property, and they would get a royalty for any time somebody runs a movie based off of their intellectual property. I mean, creating the business model for that and how to monetize that is probably a good entrepreneurial opportunity, especially for those who are familiar with IP law. Being a hermit homeless can be great spiritual heights, but are you really contributing to wider society? I would argue no. Just paying dues, man. I always appreciate the live streams and information I garner from your channel. Thank you. And also, as a reminder too, for those who weren't on here earlier, the tour is continuing with Analyzing Finance with Nick. We're coming to Dallas now in the end of April 25th, August, April 27th. New York, I know a lot of you guys asked about New York. It's happening May 10th, Philadelphia, May 12th, DC, June 7th, and Chicago, June 14th, and Seattle, July 26th. So those are the next stops up until about midsummer for the tour. I'd love to see you guys all in person. Thank you for wanting to replay. Are there plans for closer to Chicago? Yeah, I'm going to Chicago June 14th. There are no plans for Ohio yet, but I might do it in October. My best friend from growing up has moved to that part of the country in the Midwest, and I'm debating whether to do a meetup in Louisville or Cincinnati that time of year. So I'll probably go to one of those two cities, but it's just I don't know when. Do you use more or less expensive programs? Yeah, I use some other software as alternatives to Bloomberg. I'm not going to go into specifics though. What are some of the biggest learning experiences in your life? What are the mistakes you've learned from? One is the idea of Field of Dreams entrepreneurship. I'm not aging myself, but there's this movie called Field of Dreams where this guy tears down his cornfield to build a baseball field, and because of that, the ghosts of all the great Hall of Famers in the past come to his field, and nobody believes him and think he's crazy and he's about to lose his farm, but the ghosts eventually come. And that is how that's kind of a mistake from a lot of entrepreneurs do. They build the business, they create the LLC, they set up all the product, they put a lot of time and work building all this stuff, but they have no customers. And I've made that mistake multiple times before. So that's something of the lesson. Other thing is that don't be stingy with your family. That's another real, just in general. And also just there is more life than money. Just remember to be, I know this is ironically coming from a finance channel, but be grateful for your community and your friends and your family and God and all that kind of stuff. So yeah, those are kind of general lessons that I have. And also when you're younger, just try to avoid personal debt. And if you don't have kids, take risks, because that's really how you move up the social class ladder, is taking a shot of something that a lot of people would be too afraid to do. Entrepreneurship is the most common one, but there's other things too. Yeah. Thanks for Nick Monaco. Thank you for the super chat. Same with My Truth. Thank you for the super chat. I appreciate the support. I have a lot of interesting videos coming up, like pretty soon, that I want to do. I might talk about some topic previews here if you guys would be interested. And then, my thoughts on Sowell. I think Thomas Sowell is great. I think that he is a good job of explaining the underlying incentives on why you see certain inequities and imbalances in society versus like the stereotypical answer you get from mainstream society. I read a lot of his books in college and it inspired a way, I think, on certain things in economics. So yeah, I'm probably going to watch that interview on tariffs. I think an idea of what he's going to say, he's probably not going to be a big fan of tariffs. And yeah, I'm not a big fan of tariffs either, but I'd like to see what his perspective is nonetheless. Would you think these class divisions wouldn't be an issue if corporations just paid people more money? Yeah, you're partially right on that, but why should they? Like, if you really want to pay people more money, you need to eliminate the slave class. And that's kind of, every time in history where you've eliminated the cheapest source of labor or the bottom part of the hierarchy, it's always resulted in either more innovative technology, which creates higher living standards, or higher wages, or both. So yeah, like that's kind of what, like, that's the problem, is that every time the cost of labor gets too high, the elites of a country usually find some way to find some new de facto, whether it's not talking about liberty, but somebody's willing to work less than the cost of living, and that just resets things low. So yeah, and so if you like, that's partially why a lot of the people who are against immigration are strongly against illegal immigration, because that's kind of the outlet that causes trickling down in wages, in terms of like, because everybody's employment is basically a spread above whatever the person who's willing to work the least amount of money is. That's the base that everything is built off of. So for example, if $20 an hour is the lowest anybody's willing to work for, then somebody who's got 20% more skills, and I'm just using above the minimum, it's going to have 20% more pay. But if the least somebody's willing to work for is $10 an hour, that just lowers the ladder for everybody else. So that's kind of how it works on that front. But yeah, in terms of like ideas I have for videos, I have a few. One is just Catholic finance, like how the Vatican finance works. Breaking down of different economic boom times, like the America in the 20s, America in the 50s, America in the 80s, America in the 90s, and fake boom times like the 2000s, 2010s, and the 60s, and then breaking those down and like what worked, what caused those times to be good, and the ones that are fake boom times, why weren't they as good as people believe them to be. I might do that for foreign countries too, like China from 1979 to 2007, Japan in the 80s, France in the 60s, the UK in the 80s and the 90s. I might go into the concept of Hauser's law, which is this idea that tax revenue is the same no matter what the tax rates are and why that's the case. I might do videos about why the elites gave up power in the 60s, why I think 2030s might be the next great economic boom. The trade war, is it really a class war? I might do some videos about sports, and whether like what sports are linked to different social classes, and why life is too easy and too hard at the same time for the middle class, and how and relative unattainability of upper middle class life and what is that implications of that. And I might do some comments on birth rates and my probably rising heterodox views on the whole birth rate controversy. So those are kind of some things I have in mind. I have a few other ones, but those are the ones that seem the most interesting. And I do a video about the pros and cons of the gold standard. Yeah, I possibly can. I think I've talked about it in my reaction to Jake Tran's video back in the day. And I've talked about it in inflation. But yeah, that's kind of something else. But yeah, I think I'm going to wrap it up here. I'm losing my voice. This was a good live stream. Unless if there's a bunch of crazy news that happens next week with tariffs, I think I'm done with tariff-related live streams. I don't know when I'll do the next one. Maybe I'll do one on Good Friday because the market's closed, but I just did one this week, so maybe not. But thank you guys all for joining. I appreciate the support and watching the channel. And yeah, if you like these live streams, feel free to send me potential questions for more. And if you want to have any questions for me directly, you can feel free to contact me. Thanks for watching.